Alright everyone, Cowboy Trades here, welcome back to the channel for another update on Bitcoin. So while the equity markets being your S&P 500 are breaking to the downside, you're still seeing Bitcoin hold relatively strong around about the 25,000 level. Now in this video I wanted to discuss this divergence that's happening. Is Bitcoin finally decoupling from the equity markets in the higher time frames, or is this something that we've seen before? Let's dive into this. Now we're going to start off the video talking about the divergence that's happening while the S&P 500 is heading down, but Bitcoin is still sitting at elevated levels. Then we're going to dive into a few important charts, focusing on the higher time frames, moving on to some quick on-chain metrics, and then talking about what's happening in the lower time frames before we wrap up the video for today. So let's dive into this. Now, as you can see, if we do look at the equity markets, this chart that we just showed you over here, you can really see over here, your equity markets have been topping out for the past few weeks or so, specifically the past 18 days. They've been topping out and starting to head back down to the downside. However, during that 18 days, Bitcoin has actually broken down, made a higher low, and pushed back up to this $25,000 region, meaning that currently we're sitting in an 18-day divergence. So Bitcoin is still heading up for the past 18 days, and for the past 18 days, your equity markets are heading down. So like we said in the video, is this something that's happened before? Obviously in the higher time frames, if we do look at these two charts, reset this, you can still see, the equity markets and Bitcoin are tracking extremely well. So is this something that we've seen before in the lower time frames? Well, we've seen this many times over in this cycle. You can see during the FTX collapse that happened in November, Bitcoin absolutely nuked to the downside and it made lower lows, and for 15 days straight it got absolutely annihilated while it was breaking down to the downside. But during this 15 days, your S&P 500 made a higher low, and then it proceeded to break up before putting in, a nice high around about the 4,088 region. So, once again, generally, you can see after this 15-day divergence, Bitcoin broke down for 15 days, your equity markets broke up for 15 days. I had people back here messaging me saying, hey, Cowboy, has crypto finally decoupled from your equity markets? I've been asked this question many times in the bear market, and I will be asked this question many more times in the future. But as you can see, in general, your S&P 500 was moving up and up and up, and while Bitcoin had this divergence, you can see, the path did continue, and eventually Bitcoin started following the same trend as the S&P 500. So let's come back to the previous example. You can see over here we had an 11-day divergence where, if I line this up, you can see actually from right here, Bitcoin had a, 11-day divergence right here. You can see Bitcoin came down and made this low. Bitcoin started pushing up and rallying before, pushing up higher. And during this time, you can see your equity markets made a low. They came up and made a lower high, and then they broke down and made lower lows. And once again, this was an 11-day divergence. Your equity markets broke down into lower lows, and Bitcoin in the lower time frames pushed up and made a high. What happened after then? Your equity markets decided to break back up. Bitcoin followed the same macro trend. Your equity markets then said, hey, the rally's done, we're breaking down, and Bitcoin followed. So once again, we're seeing these divergences in the lower time frame. Sometimes they happen for 11 days, sometimes it's 15 days, sometimes it's 18 days. And in the previous example, you can see when Bitcoin topped out at 69,000, your cryptocurrency markets were much more overextended than your equity markets. So what you actually saw is Bitcoin top out and have a nasty landslide for 55 days straight. And what happened for the equity markets? They pushed up and made an all-time high. They pushed back down and made a higher low, pushed up, made a new all-time high, higher low, and then they topped out 55 days after the S&P 500 did. And when this happened, people were messaging me and saying, hey, Cowboy, is Bitcoin finally decoupling from the S&P 500? Over here during this almost 2-week divergence, I had people asking me, has Bitcoin finally decoupled? During FTX, people were saying Bitcoin has finally decoupled. And in the past 18 days, it only takes 18 days of these charts not tracking for people to think, hey, Bitcoin has finally decoupled from the equity markets. But if you look at the higher time frames, these charts will always, at least in my opinion, at least for the next 10 years, maybe 20 years or so, people view, investing in stocks as a slightly risk-on asset. Bitcoin is much more of a risk-on asset. So, for example, in my opinion, at least, I do believe these are going to track for a long time coming. And in the higher time frames, these are still beautifully tracking. And to answer the question of the title of this video, and like I said at the start, this is an 18-day divergence. This is nothing insane. And I do think that we we will continue to break back down to the downside with the equity markets, just like we're seeing the S&P 500 top out at this moment in time. Now, I was going to put a different spin on this, but as we have got to this point anyway, one reason why Bitcoin may be diverging at this moment in time is, one reason is because we've got retail money flowing into these markets and a lot of degeneracy, but I will explain that in just one second. But a separate reason is that we have obviously approached this trend line, we flipped it, and Bitcoin may just want to retest this 200-week moving average as resistance before we do head back down. I won't spend too long on this, but the 200-week moving average has historically been basically the most important trend line for Bitcoin, and it has been a very long time since August that we came down and retested this. So Bitcoin may just want to retest this one more time before breaking down to, maybe 14k, maybe 12k, maybe 10k, and then before obviously going on that next rally to the upside, which I think Bitcoin will go to hundreds of thousands of dollars in the next cycle. But in the immediate short term, I am of the opinion that we will break down for one final low. I don't think the bear market's going to, last years and years and years and years. I think we're coming down for one final low before we do continue with the rally. You can also see while we are retesting this 25k level, or rather while we're retesting this 200-day moving average, 200-week moving average rather, you can see that we've double topped at this 25k region. And since I actually started recording the video, Bitcoin is actually having a nasty landslide to the downside. So if we do come over to the 1 hour time frame, as I am recording this video, we've really started to move down. In fact, yeah, literally pretty much as soon as I started recording this video, Bitcoin has started to move down pretty fast. And it is looking like if we slap some EMA ribbons over on this, get rid of all of these, it looks like we're starting to confirm a new trend to the downside. On the 5-minute time frame, this is obviously confirmed. On the 1 hour time frame, probably since I started recording, we have just flipped short on the 1 hour EMA ribbons. On the 4 hour EMA ribbons, we are coming down, so keep your eyes on around about 23,800. We're coming down to the long-term moving average at 24k. But let's move on from here, as we are still focusing on the higher time frames. We do have a lower time frame chart to talk about in just 1 second. Also, I have just recorded a video for the USDT Dominance, so I don't want to spoil too much on this. This will be a separate video, but the USDT Dominance is sitting at a very crucial level of support right now, and it is looking like it wants to blast back up to the upside. It's moving up quite strongly right now, especially in the past 1 hour. People are moving out of Bitcoin and they're moving back into stables, and we're seeing this, we're seeing oscillators for the USDT Dominance telling us that we should be getting ready for a break to the upside. This video will either be uploaded late tonight or potentially early tomorrow. Now, moving on from here, once again, another reason why we might be seeing this slight degeneracy in the markets right now is actually something that we covered the other day when we made a video called Insiders Are Selling Their Stocks. We talked about how corporate insiders are selling at extremely elevated levels, the highest levels they have in the past year. We've also made videos in the past day talking about how Bitcoin whales are selling, which we will talk about. But when I say these markets are rallying based on pure degeneracy, that is absolutely what it is. If we're looking at this chart, you can read what Gavin Baker said over here. This is definitely a good share. But you can see this shows what happens for your EPSs after earnings reports. EPSs are earnings per share. So for example, if you have an EPS beat, historically this means, hey, you've outperformed how the markets think you are going to when it comes to earnings season. And companies that beat their EPS reports normally have huge moves up to the upside, while companies that obviously underperform their earnings per share promises, or not promises, but the markets think that Apple is going to increase by 1% this earnings season, and it turns out that sales were down dramatically and it's down 2% instead of up 1%. And you see these companies that had EPS misses underperform the ones that had EPS beats. That's just, how the markets work logically. And for the first time in history, we're seeing companies that have had an EPS miss, meaning they've missed their earnings per share that was predicted by the markets, have been having a huge move up to the upside, while EPS beats have been moving down. So, once again, the markets are rallying based on pure degeneracy right now. This is something that we did quite recently talk about, and since we made our whale watching video yesterday, we talked about how the Bitcoin ratio of retail to institutional addresses has almost pushed up to a new all-time high. And since we made this video, you can see this has started dramatically moving up. This means that retail traders are currently buying at extremely elevated levels. And if we do come over to the addresses with more than 1,000 Bitcoin, the ones that pretty much sold the exact top, they're currently selling more to retail at this moment in time. Since yesterday, they broke down into new lows for this cycle. So you've got, once again, degeneracy playing out in the stock market. You've got retail traders buying at elevated levels. You've got whales selling. You've got Bitcoin active addresses shooting through the roof right now, while you've got USDT dominance moving to the upside, meaning that people are starting to buy back their stable coins and they're starting to sell their cryptocurrencies to get back into stable coins. If you don't know how the active addresses work, basically when there's a lot of senders and receivers in the network, this typically correlates to lots of people sending their cryptocurrency from ledgers, hardware wallets onto exchanges. So you've got a sender wallet, that's typically a hardware wallet, sending to a receiver wallet, that is a exchange. Maybe it's Coinbase, maybe it's Binance, maybe it's KuCoin, etc. You know, if you're sending from one device and you're receiving on another, you've created, you know, two new active addresses in this network. So typically, you know, once again, when active addresses start to spike, it is a sign that the markets, or specifically Bitcoin, should be breaking down. And, you know, the active addresses have been hedging higher and higher and higher, and making higher lows and higher highs. And as you can see, while this has been going up, you know, bar this data point over here, because this isn't, you know, an exact science. A lot of the time, this is a lagging indicator, but it is still a good macro indicator, letting us know that active addresses are moving up and Bitcoin should be heading back down. You've also got the Bitcoin network value to transactions ratio, also known as the NVT. If you want to read more about this, you can read it on the side. Basically, this is the Bitcoin price divided by the Bitcoin trading volume denominated in US dollars. And basically, a high NVT ratio suggests that Bitcoin is overvalued. And the NVT ratio tends to go in the opposite direction of the Bitcoin price, as you can see. If we zoom in, you know, the NVT has been rushing to the upside, and Bitcoin has been breaking to the downside with the NVT rushing up, but we're seeing a huge divergence where the price is actually heading up, but the NVT is also heading up extremely fast, literally up to new all-time highs, indicative that the network is extremely overvalued right now. And wrapping up on the higher time frames, before we do move over onto the lower time frames, you can see that Bitcoin is also sitting in a huge area of resistance right now. Well, technically this is a huge volume profile, so if we do start breaking down from this level, this could be one of the largest liquidity grabs that we've seen in this entire bear market. If we also put on the EMA ribbons and we also put on the bull market support bands, once again, getting rid of all of these EMA ribbons that we do not need, what you can see is if we're looking at the bull market support bands, you know, for the first time since over here and over here at the all-time high, we're poking our head above the bull market support bands. And, you know, I do think this is a massive overextension. And if we are looking at the EMA ribbons, you can see, you know, not only is this 25K level lining up with the previous top over here, not only is it lining up with the 200-day moving average, which is around here, but it's also lining up with the short-term moving average. So we've got a lot of resistance overhead. We've also got huge volume clusters that we have already grabbed liquidity from. And if we are moving on to the lower time frames, like I said, since I started to hit record on this video, we are starting to break down pretty hard. And look, it looks like we are currently sitting in a asymmetrical triangle slash a bullish pennant. We have broken out to the downside of the 4-hourly candle body closes for this. You can still technically see that you can just redraw this and say, hey, potentially we are still in a bullish pennant at this moment in time. So I wouldn't celebrate too much until Bitcoin solidly breaks beneath 24,100. But we are looking pretty bearish right now on the 4-hour time frame. And of course, with this rejection playing out, it just looks like we're, you know, bashing our head against here, and it looks like we're losing steam at this moment in time in the lower time frames for Bitcoin. Now, something else you can talk about for Bitcoin in the lower time frames is the fact that on this 4-hour chart, this looks a lot like a bar pattern with a price target down here at 21,400. On the daily time frame, this could drag out for a little bit longer. We can go sideways for a little bit longer. Like I said, when we do look at the divergence chart, this is an 18-day divergence. We've had divergences before that took 55 days. While I don't think in this cycle we're going to see another 55-day divergence, is it possible? Of course it is possible. This is Bitcoin. But with that being said, it's not implausible whatsoever for us to chop to the side, maybe even push up one more time before coming down and forming this bar pattern on the daily. On the 4-hour though, it's looking a lot more convincing that this is going to be getting ready to move back down. And if we do head over to the weekly time frame, this is also another, you know, cause to believe that, hey, you know, it is possible for us to chop sideways a little bit more and maybe have, you know, a 50-day divergence, maybe have a divergence for a month. But on the weekly time frame, we do have a bar pattern with arguable where to start this from. I personally would draw it from down here. a price target of a bar pattern all the way at 16,300. And also, if we are looking at this as well, a lot of your oscillators for Bitcoin are extremely overextended right now. If we're looking at the stochastic RSI, this has already crossed this crossed bearish and then it crossed bullish, but we're still super overextended. We're sitting around about 91, so not really a time to be bullish on the stochastic RSI. If we are looking at the MFI at this moment in time, we have had, it looks like a breakout from this linear trend line, but we're all the way up at 67, extremely overextended for the money flow index. Lots of liquidity, lots of volume has flown into this market, although saying that, on the monthly time frame, if we are looking at the volume that we've currently got, we don't have, a particularly impressive amount of volume sitting on this monthly time frame. This is definitely looking like, previous rallies that we've had over here. These are rallies that are not necessarily supported by too much volume, and these rallies that aren't supported by too much volume do not typically last for too long. Rallies like this, where you can see huge amounts of volume stepping back in, this is when you see bull markets. Rallies over here where you see huge amounts of volume stepping in, this is where you see the start of bull markets. This is pathetic volume that's coming in right now. So another reason why I think this is a fake rally. You can see over, if we do head back over on the monthly time frame, we're extremely oversold for the squeeze momentum indicator. Bear in mind, this is a higher time frame indicator, and I am believing that Bitcoin will bottom probably this year or early into 2024. So this could definitely turn around in the next 6 months or so. Being a lagging indicator, it can definitely take a long period of time. On the weekly time frame, let's see, is this a linear downtrend? You can see something like this playing out with the squeeze momentum indicator. We are pretty oversold. We've exceeded the heart line of the squeeze momentum indicator for the first time since the bear market really started up at 69,000. So squeeze momentum indicator is also extremely overextended right now. And with the 4-hour time frame starting to nuke, yes, we're sitting at support, but keep your eyes on 24,100. If we start breaking beneath this, specifically 21,150, but I'll give it lenience to the downside. 24,100, especially 24,000. If you start losing 24,000, this is looking like a Bart pattern that's going to come down all the way back down to 21,400. So that is pretty much all I've got. I've also just made a video on the yield curve talking about how this is currently predicting a recession, so keep an eye out for that. I will upload that today at some point, whether this gets uploaded before or after. This is an extremely important video, so even if you only watch my cryptocurrency videos, I highly recommend you check out some of my stock market videos. Cryptocurrency videos, or specifically Bitcoin videos, are highlighted with a orange banner. If I'm talking about the stock market, you will see this kind of light blue logo where I talk about insider selling in the stock market, the yield curve. Insiders interestingly sold at the exact top for the equity markets. Once again, like we talked about at the start of the video, your S&P 500 is breaking down, government bonds are heading up. I don't want to talk too much about government bonds and the yield curve, but these are dramatically moving to the upside right now, and this is obviously a bearish sign for your equity markets, and this is also an extremely bearish sign for Bitcoin, since these risk-free assets like government bonds have been exploding in profitability. Right now you have your US 10-year coming up to 4%, and you've got your US 2-year government bonds putting in a rate of 4.7% APY. These are risk-free investments. So when you've got government bonds putting in 4.7% APY, almost 5%, and you can lock that in for 2 years, basically a guaranteed 10% return on government bonds, it's no wonder that all of these risk-on assets like Bitcoin and your stock market are not doing too well right now. Why would you want to risk a bunch of money in the S&P 500 when a recession is looming, when you can lock in a 10% return absolutely risk-free in government bonds right now? So with that being said, like I said, I don't want to spend too much time focusing on government bonds. I've made a very in-depth specific video talking about the yield curve that will come out a little bit later today. But for today, my friends, that is all I've got. As always, if you do enjoy my content, let me know down below by leaving a like and a comment. That definitely helps get the videos trending, so I would appreciate it. And also, if you want more of my content, feel free to head over to my Twitter. Follow me at 618_cowboy. Also, be sure to join my Discord if you haven't already. If you come over to my YouTube and click on the About section, you can find my official links for Twitter, Discord, my Instagram, and the merch store. These are all down below, but for today, that's all I've got. It's been your boy Cowboy Trades. I'm out, my friends. Peace.